So guys, it's day 9 of BGW Bootcamp. Day 8, I've explained on how you can as well tend to set your Fibonacci tool and how to use it. However, day 7, I guided through basic market structure, which I showed you guys. We have the 3 basic market structure like that of the swing market structure, which is right here, the swing structure, the substructure, and the minor structure. However, I go in depth and show you guys that whenever you see price do something like this, having this low and then a break of structure, this part right here you see becomes your higher high, and then this structure right here becomes your higher low. So right here, this zone to this zone become your swing structure, and right here become what? A break of structure. Easy. So that's to say this is your swing structure. However, the substructure tends to be the reversal, which we tend to look for, and the reversal is whenever you tend to see price come into this particular zone and then continue the trend in a bullish trend, right? That is what market structure tends to be in the basic, right? Easy peasy. However, now you've known what it is, it also applies even on a bearish zone. So let's say we have a lower high, and whenever price tends to take this low down, it becomes a lower low, and then this low right here becomes your swing structure. This bearish low become your swing structure, which they say from this zone right here become your lower high, and then this zone right here becomes your lower low, right? And what you normally expect, that this is your swing structure, and the next thing you're going to be expecting is your substructure, or moreover your minor structure, which you're going to be catching. Now, what is your substructure? Your substructure tends to be that reversal which come into this zone and then continue the sell trend. Easy peasy. However, now you've known this basic, I know a lot of you are now cool with this. Now we're gonna ask me, Bernard, where can I as well take off trade from this zone? Now I also explained on my previous video, like let's say when you have this kind of trade, you can either put your stop loss right here, and then what else, put your entering at this zone. Let's say in a swing structure, right? You can as well put your stop loss right here, because that's broken the structure. You're expecting it to come to this zone and then do what? Continue what? The trend. But this does not give you the exact entry. I also went on showing you guys how to know where the discounts and the premium zone is. Now let's say in a bullish trend, and now you want to know where you're going to buy from. Now you know that a swing structure is when you have a low and then a high being taken out. This tends to be your swing structure. So basically, if you get your Fibonacci tool right here, let me get my Fibonacci tool. Now how do you use your Fibonacci tool? Then you put your Fibonacci tool from this higher high right here to the higher low. Easy peasy, to this zone right here. So you can just take it this way. Let me just put it this way, right? So you must make sure it aligns. Now you've seen that, you're gonna know that, okay, you all know premium zone or all know discount zone. And like I've said, on a subsequent video, I'm going to make a dedicated video on premium zone and discount zone and even the equilibrium zone. Right now, you all know the equilibrium zone tend to be the 50%, which is the zone you tend to do anything. However, you want to know that this other zone right here at the top tend to be your premium zone, right? And this zone right here tend to be your discount zone, right? That's easy. And at your premium zone, you urge to look for sell, and at your discount zone, you urge to look for buy. And if you still don't understand this basic, part 1 of market structure explain everything in details. So now you've understood that this zone is at your discount zone, this zone is your premium zone, and you can see that at this break of structure is exactly where your equilibrium zone is. So what are you expecting? You're expecting that price should come to this particular zone right here, and then what do? You buy off from. Easy peasy. What do? You enter your trade right here and do what? You continue the trend. Easy peasy, and then you make money. Out of 1 to 10, this particular strategy can work, let's say, few times. So instead of markets or the trend or the chart to come into this discount zone and then buy off from, what will you do? It will as well take out this higher low, then before continue the trend. And that is where algo market structure come in, and I'm going to teach you right now from this particular video. And guys, before I actually guide you through what algo market structure states, which is the law of algo market structure, you want to know that if you're still watching this video, you're still following this bootcamp, you are a goat, right? All I want you to do is to like this video, subscribe to the channel, turn on the bell notification so you're going to be notified whenever I drop amazing bangers like this on the BJW channel. And with that said, you want to also know that if you've not set up an account on Bluefin, which is sponsoring this bootcamp, you want to go ahead and set up an account on Bluefin and start trading Bluefin. This guys gives you the best ROI on sports trading, investments, and futures trading, which is to say, if you tend to trade with them, you earn high, and you can also get paid for trading with Bluefin. And these guys are new in Africa, and if you are in Africa also with me right now, you want to make sure you start using Bluefin. I've made a dedicated video on how I've also made money with them trading on Bluefin, and all these videos are on my channel. If you use the first link, which is going to be in the description section of this video or in the comment section of this video, and set up an account on Bluefin, you're going to be getting a huge incentive for creating an account and making your first deposit on Bluefin and start trading. And that way you also get a free trial bonus which you can use to trade for free and get free profit off the trial bonus. You can't withdraw the trial bonus, but you can withdraw the profit you've made from the trial bonus. So with that said, let's get back to business. Right now, you want to understand what it is on the basic market structure of algo market structure, and then we tend to show you a few examples on chart. Algo market structure tells us that, or state that, before you enter any trade, you must wait for a sweep of the higher low, right? And that way you look for a break of structure, another low, then before you enter a trade. And I'm going to explain. Now, we all know that if you're new or you don't know what algo market structure is, now you want to know that before now, even before you watch this video, you want to say whenever you're seeing market doing something like this, to buy from here, or you just want to buy from here. If you actually tend to do this, markets can tend to be freaky, can just fake you out then before taking its major high. So you don't want to do that. That is where patience come, and that's where also algo market structure comes in. Right now, in algo market structure, it tells us that we all know our basic market structure, right? Having this, right? This is our basic market structure. We all know that right here, from here to here, is our swing structure. What does algo market structure comes in? And this is like an advanced way. Now, algo market structure tell you that instead of you to put your Fibonacci tool or get a Fibonacci tool, mark out from here to here, and then come to this zone, wait for it to come to this zone, then you put your stop loss here, you urge not to do that. All you have to do is to then wait for price to do what? Come into this zone, sweep this higher low, right? Once you sweep it, then on that break of structure, then that is algo market structure. So then you will now say that this will tend to be our what? Market structure sweep, right? And then this will be your what? Your higher low you tend to protect instead of this. Now you've seen this, then the next you're going to wait, you're going to also now wait for another reversal, which is the substructure, to come into like this, to form another low, right? And then give you another structure, another break of structure right here. So once you've seen this, then the urge to do what? To mark out then your first break of structure, then to mark out your first break of structure like this, and you tend to mark out another break of structure like this, right? Now you've gotten this, then you tend to mark out this low right here, basically, right? Easy peasy. Now you've seen this. Now this is in a bullish trend you want to know. So we have the bearish trend, and I'm going to show you what that is in a bearish trend. Now I've gotten this, set up. We wait for price to definitely come into this zone, right? And then break this one particular structure, and then you make money. Easy peasy, right? And 80% of the time this will work for you, right? Now this is what it is. First of all, we can just call it, let me delete this right now. So we could just call it an A, the higher low, which you're meant to protect. After the market structure sweep, which if you wait for, you could just come right here and call this your A, right? And then this, you could call it your B. And then right here, you could call this place your C. Now, whenever the B is being taken out, which is this, what do you want to do? You buy from here and then take profit or take out this market structure or this break of structure. Is that easy? And 80% of the time it will play out more like this than this particular one you're seeing right here right now. I just believe you guys understand this. So if you don't understand, you go ahead and rewatch, because this is where the main stuff lies. You just don't want to miss out on this. And let's say you want to be sure, all you have to do, you get Fibonacci 2, you place it from this higher low down to this higher high, which is your C right here. And what you want to do, you want to see that right here is at your premium zone at the top, and as you can see the 50%, and basically right here is your discount zone. And what you're expecting or what you're waiting for is for price to come into this B. And what did the price do for my chart? I didn't even use Fibonacci 2, I just did it manually. What did it do? Price came into this zone, which is our discount zone, and what? There is a buy. Is that easy? So that is how this workout is. There is no big deal in it. So I've shown you that for the bullish. I'm going to show you that for bearish. Then I'm show you few chart example and some trade I've taken using this same strategy I've shown you. And then that way we're going to continue on day 10, which I'm going to be talking about either liquidity or whatnot. So now in a bearish trend, we all know basically that days you must see what? A lower high and a lower low, right? So this tends to be what? Our swing. This low that breaks this lower high tends to be our what? Our swing, right? But normally, as a basic market structure trader, if you've not know about the algo yet, all you want to tend to say is whenever price tend to come maybe to this zone, then you do what? You buy off from. But this is not clear enough. But algo market structure, which I just explained, tend to tell us that we must wait for what? A sweep. There must be what? A sweep of this high right here. There must be a sweep and then your first break of structure. Easy peasy. And this is the sweep right here. Must be a sweep of this lower high, and then this tends to be your what? Your protected lower high, right? Instead of this initially, this tends to be your protected lower high. And once you've seen your protected lower high, you've already gotten what? You see your first break of structure, and I tend to make it what? It must be an ABC. And an ABC model is after you see your first break of structure, the next thing you're looking at after is another low, right? You wait for what? Another low to come into this zone, and then what? It come and break this structure. And now you've seen that this tends to be your what? Your second break of structure, which is your A, B, right? And then C, right? And then you can just mark it out. Easy peasy. And then this is your break of structure, which I just said, your first break of structure. And then this tends to be your what? Your second break of structure. And to make it easy for you not to, forget, you can alphabetically name them as what? ABC, which I just say. And where is your A? In a bearish trend, your A will tend to be this higher low. So your A will tend to be the higher low you're seeing right here. This will be your A. And then right here will be your B. And also here will be your C. Now you've gotten this setup. All you're going to be doing is to wait for price to play off what you want, because you don't want to buy from this zone. You don't want to just come right here and buy. You don't want to, because price might as well take you out. So you just want to wait for price to do what? To come into this zone. It's just like more or less forming another sweep, like the way it formed right here in this high and this higher low. So you just come right here to do what? Tap into this zone, take out this high, this lower high, and then you catch it from here and then continue the sell. Easy peasy. That's so easy, guys. You don't need to stress this whole thing, and this is going to play out 1000% times. Is that easy? All right, so let's say you have something like this in a bearish trend, just higher highs. And so now where can you enter your trade? What will you do? So all you ought to do is still the same thing. Now you don't have to now start saying, okay, you want to wait for price to do what? To come right here and take this out. No. So all you want to do is to look for what the recent high or the recent low for price to take out. And where's the recent low from here is this, right? So all you want to do right now for you to wait for price to come right here, take out this particular recent low, right? Then do another break of structure, then come back and what? From another break of structure. So then this tends to be your what? Your setup. So that is it. Is that easy? Also in a sell position. So if you're seeing maybe buys, higher highs, just like the higher highs and the low are not like, there's no sweep, just have to wait. Whenever price tends to take out a recent higher low, then you start looking for your setup, you start looking for your ABC model, easy peasy. And now once price has done this, the next thing we're going to be expecting is for price to what? Come into this zone right here, which is our B, and then you catch it and boom, to the upside. Is that easy? Now you understand this. I believe each and every one of you watching this video must have understand this strategy. I'm going to go ahead and show you guys in a few charts and then we take it from there. So in my previous video, I used gold. So I'm going to use a different pair right now. Let me use BTC because I took a trade on BTC, a sell position trade on BTC, and it actually played out using this same strategy. And guys, if you're watching this video, all I urge you to do is to make sure you're liking this video, subscribe to your boy's channel, and turn on the bell notification. That way I will tend to see that you guys are really supporting. Your likes, your shares, your comments really matters. And if you're understanding, it costs nothing to comment. Thank you, Bernard. I understand, right? And that's it. So now this is it right here on. So this is it right here on BTC. Now, if you watch, basically we have something. I'm going to show you what I got right here on BTC. We have something like this, right? This something like this. Then came down, and then this. Then came down, and then what are we saying? Now this something like this, and then it's coming down. Right? Easy. Now, so you can clearly know that right here, BTC tend to form the market structure sweep. Now, where is the market structure sweep? As you can see, right here is the market structure sweep, right? And then here became what? Your lower high, right? Boom. And what happened? This also became a break of structure. You can see the break of structure right here. And what happened? It formed another what? Another high right here, as you can see. I'm trying to explain this to you guys so you tend to understand. So this is a setup I'm seeing currently, but I'm going to show you how I've caught a sell setup like this in BTC, but in a lower time frame. This is a higher time frame, which is 1 day. I think I caught that setup on either 15 minutes time frame. I saw this exact setup, and then I had to like niche down to a lower time frame, and I caught a setup, and it played out so well, right? So now you've gotten that. Now what are we expecting? Now we are expecting for price to do what? To come into the zone, right? Come into the zone and then do what? Continue the sell. Is that easy? So that is what it is, right? If you get your Fibonacci tool, put it from here to here. Now you will clearly see that right here is your premium zone. Right here is your discount zone. And now what is price doing? Now, if you look decently on this BTC pair, BTC now is at the discount zone from this setup. Now, what is he expecting? Now, if you catch a buy from here, where you tend to be taking your TP should be right here, because this is where it's going to trigger from and continue a sell. So you can buy right here where BTC is. That's 104 here, but we urge not to just jump into a trade and buy. There's a confluences that are going to consider for you to buy or not. Easy peasy. So this is a clear setup in a higher time frame to tell you that you can look for a buy setup right here and then maybe take a TP off this zone, and then take a TP off this zone. I just hope you guys understand. Just take a TP off this particular zone right here, because this is where Bitcoin will enter and then continue the sell down. Easy peasy. But however, now you understand that the next one is, let me show you guys the setup. Coming to market structure, I've niched down to 1 hour. Now what happened? You guys can clearly see that price did what? Came to this zone. You can clearly see the sweep of market structure right here, right? And then what are you seeing next? You're seeing the higher low. And then what's next? You're seeing another break of structure right here. You can see another break of structure right here. And then what else are you seeing? You can see another low right here. Now, what else? You can see that it has breaking this other break of structure. Guys, bear with me. My cursor is giving me issue. It has broken the structure. Cool. Now, what are you expecting? We are literally expecting, no matter what price do, price will definitely come into the zone and then boom to the upside or rally higher. Is that easy? Because now we've already seen that this our structure, which was swept, right? Structure swept, and then the next thing you're expecting is no matter what price do, you wait for it to enter, take out this your B, right? And then boom, you buy, you make money. Is that easy? So this is going to work 90% of the time compared to you just maybe doing something like this and then you just come right here and then just buy. No, because the trade will definitely sweep you off like the way it swept this right now. If maybe you take this trade maybe from here, right here, and then you wait for it to come to the zone. Okay, let me show you a chart example which I just saw. So now let's say you took this trade from here, right here, maybe break this structure, and because you've seen the structure broken right here, right, then you wait for it to like maybe for a retest, this little retest, because you've seen this retest, right? Then what you're expecting that you're waiting that whenever price come into this zone, right, this zone, then buy. What will price do? Price will definitely sweep it, which was what it does. It sweep it and then came down. So you will just hit stop loss and then lose your money. So this one will work 80% of the time. Definitely play out, but then you will lose a lot of money before it will now start picking, or if possible, it will not check you out and you now lose your accounts or blow your accounts. But this one, you will be very safe because now price has played out very well, show that structure. Now this is in a 1 hour structure. Now if you want to see it clearly, you go to 30 minutes, right? So verify your setup because that's what you want to always do. Now you go to 30 minutes. Now if you watch right here in 30 minutes, you can clearly see what we just drew. You can see the sweep, right? After price has taken out this, which is your major swing, it sweep down this low. You can see that price took out this one right here. What happened? It sweep this one, come to this zone low, and then break of structure. This is the setup. And then what happened? It came down again and do what? Break of structure. And what are you expecting? Price to come down to this zone and what? You continue the buy. Is that easy? So I just hope you guys understand everything, understand this strategy, because this is what you need. This is like the basic to advanced strategy you need to keep eating in the market, right? And now there are other conflicts going to add where liquidity comes in, where POI comes in. So basically, once you've understand that, the next you want to look at for, you can also niche down to 15 minutes. Now in 15 minutes, we can literally see something. I won't go in deep showing you this, but as we go on, consequently, I'm going to be showing you how to go about this, because you can definitely also see your setup, the market structure sweep, and then other stuff too in your 15 minutes, even in 5 minutes. I guess the trade I took was in a 15 minutes, the sell trade. Let me look for that sell trade. All right, so it was in a 15 minutes. Let me zoom this. Let me take it down a bit. So you guys should see. Now, following the trend of Bitcoin, it has been bearish. Now, I tend to look for what bearish setup. I've taught you guys about trend, right? So you have to understand this. So these are like building blocks you need to know. So all these building blocks are very important, guys. You don't want to miss out on it. Now, in the 15 minutes chart, right? Now, you want to see what I looked for. So at first, I saw this, right? Which is the major swing. Then what happened? Price took it out, which was this. And then did what? Came to this zone, right? Came to this zone. Boom. Let me pause here. Now, this is what I just showed you guys. So this right here became my sweep of market structure. This right here became, right? Boom. That was my sweep of market structure. Makes sense, right? Now, the next thing was the break of structure for the sweep, right? You can see this was the break of structure. Took in this high. Boom. I will say this is my high, or lower high, After I've seen the first break of structure, what's next? I saw another low, and then what happened? And price took out this high. So after it broke that structure, it came down and took out this high, right? Let me just mark out this high and took out this high. As you can see, exactly like the candlestick. You all should remember how to mark out this out. Now what happened? You can see that now price, after it plays out, came down and everything, then what happened? It tapped into this zone, right? As you can see, and this was the catch I caught, and then I rallied it down and took TP right here. You can see it tap into the exact TP of this break of structure, of the next break of structure, and then what happened? It started going up again. So the next thing that will happen is I will hit stop loss. And this is how you guys hit stop loss. Now it has done this, the next thing I'm waiting for is, now these are liquidity. I don't want to go into liquidity, and this is how you can understand structure. And trust me, if you understand structure this way, you won't lose out. And if I even tend to put in my Fibonacci tool on this zone to this zone, right, now you're going to see that it is as well. You can see this was a premium zone right here. It tapped into it, and then what happened? Boom, it came back also into the discount zone. Right, so because it came back to the discount zone, the next thing you want to be looking at for is a buy. Is that easy? You can see it after it tapped into the sell, it sell into the discount zone, and then you saw another buy. Now which took out this high, right? So the next thing I'm going to be expecting is for price to do either come down back into this zone, into the discount zone, and then continue the trend, or it will keep on going. Price will definitely come into this discount zone again, then continue the higher trend. Is that easy? You just need to understand this basic. If you understand this basic, other ones will just be, rice and beans for you to just put together and then mix it, and then you're enjoying your meal. Is that easy? And guys, let me finalize on the trend. Let me use my Fibonacci tool on that of the buy position I saw in 1 hour time frame. And guys, if you're still watching this video, I don't know why you've not subscribed to this channel. I don't know why you've not liked this video. I don't even know why you've not shared this video. You ought to do this, guys. That's all I appreciate you guys for me to do. Right now, getting my Fibonacci tool. This is my Fibonacci tool. I'll mark it from this zone and then to this break of structure, to the current break of structure. Right, so this is the current break of structure. So you can clearly see that this zone right here is our premium zone, and this zone is our discount zone. And what are we waiting for? We are waiting for whenever price come back to our discount zone, we buy. Now for you to know your exact entry, now you've gotten your Fibonacci tool, you take this to this first break of structure. And where's the first break of structure? Can I just put it here? Now if you watch basically, now the next thing you want to see is you're going to wait for price to come into this zone. Now if you watch the video for candlestick, I explained about doji, and right here you're seeing the doji. Now if price then to come into this doji, open or close, it will definitely go to the upside. You can even, I don't know when this video going to go live, but you can go ahead and check this, what's going to play out. Price will come into this zone. It's either spike up from this zone right here, this one, or this, or it will not go beyond this doji right here, which is the sweep you're seeing right here, which happens to be this particular sweep. And then the next you're going to see is a rally. And if you hold this trade, you can make maybe 1:2, or you can even hold it maybe to Valhalla. And guys, that's going to be it for this particular video. And if you understand it, congratulations to you. And if you understand all I've explained, go ahead and comment in the comment section below that I understand everything, and then go ahead and do an assignment. So an assignment right now I'm going to give you is go to any pair of your choice and mark out your market structure sweep, the first break of structure, second break of structure, and then see what price going to do, after which you've seen your first and second break of structure, which you're moreover going to call your ABC model. And then whatever it does, you mark it out. That shows that it works, right? And then look out for all these things, and then that way you're learning. You guys can do it for like 5 pairs every day, and then I'm going to see you guys in day 10. And with that said, if you're enjoying this video, don't forget to set up an account with the sponsor of this video, and don't forget to share, subscribe, and comment. And until I see you in my next video, keep winning, stay safe, and peace out.